So first and foremost, as you know, a lot of people are talking about the 150K mark for Bitcoin, but recently you said 200K. So what factors were considered in that?
Yeah, so there's three things that I've taken into consideration. The first, and let's say most basic version, is to extrapolate the relationship between price and the ETF inflows so far. So since the ETF started on January 11 in the US, you've had about $11 billion of net inflow, so taking into account the grayscale selling. And the price has gone up like $25,000, something like that. Obviously, it's been volatile this week, but big picture, it's been roughly 11 billion inflow in dollars, 25,000 on BTC price. So, in my opinion, the inflows will continue. And what I estimated for the first year, roughly, it could extend slightly into next year. But in terms of getting the ETF market positioning from nothing in the US up to kind of mature market, should be somewhere between about 50 and $100 billion. It's about 400,000 up to 1.2 million Bitcoin. And obviously, depending on what the price does, gets you to the flow in terms of dollars. So far, we're almost bang in the middle of where we should be in terms of 2 months in terms of the ETF flow. So with that, if I then assume that we get my midpoint estimate, so $75 billion, and extrapolate what's happened so far, that could get you to about 250,000 for BTC price. Again, that could be in 2025 rather than this year. A couple other measures that I took into account that are related to the gold ETF analogy and a gold versus BTC portfolio. Firstly, on the gold ETF in the US, that started in November 2004. The ETF market took a long time to mature on the gold side by BTC standards. It was about 6 or 7 years, but the price multiple was about 4.3 times. So the gold price went from roughly $400 to almost $2,000 during that time frame. And then it's gone, let's say, mostly choppy sideways since then, right? As the ETF market has been mature for the past 10 years or so in gold. If you started where we were pre-ETF in Bitcoin, it was about $45,000. So 4.3x on 45 gets you to about $200,000. And so I think that gives you like a reasonable metric in terms of the ETF build out, if you like, somewhat similar to the 250, which is extrapolated on what we've seen so far in terms of price impact. And the third is to say, if you only had two assets in a portfolio and they were gold and Bitcoin, and you optimized based on past returns and volatility and correlations, etc. If you started from the December 2017 high in Bitcoin, so as to not make up the numbers too much, like you start from a previous high, and so part of the cycle has been downturns for Bitcoin. That says that right now you should be around 80% gold, 20% Bitcoin. The total gold value above ground is about $15 trillion. And so to get to 80-20, you can work out roughly where the Bitcoin value should be as well. Right now, the mix in total value is about 91% gold, 9% Bitcoin. So obviously the Bitcoin price needs to go up to make up the difference there. So if you assume gold prices go broadly sideways, that again gets you to about $200,000 on Bitcoin. So for me to have a few metrics that are pointing to something like 200 as being the medium-term level tells me that I should have that as my forecast for 2025, which is my view for the end of next year. Now we might overshoot a little bit to let's call it $250,000. I think that's feasible next year, but after that will be 18 months past the halving, and that's normally when things start to cool off slightly. This time I'd expect Bitcoin prices to go sideways rather than collapse like they've done in previous cycles. And I think the midpoint of that new range is probably somewhere around 200,000. So let's say 200,000 plus or minus 50,000 as a normal trading range in much the same way as gold has been sort of sideways around 1900 or 2000, and it's up or down a couple $100. So same style, but obviously BTC is much more volatile at the moment than gold. Over time, probably vol also falls in Bitcoin if we can track sideways for a period, but clearly that's a story for another day, given it's more like 18 months away.
So would you call this current fall from above 70K a sideway then?
In terms of how it relates to volatility, sure. So we got to 73,000, we pulled back to 60,500 24 hours ago or 36 hours ago. In terms of the vol level for Bitcoin, which is something like 80%, it's a reasonable pullback. You have had 3 days now in a row of net outflows on the ETFs. So the grayscale selling has been larger than the inflow to the new 9. That's the first time we've had that for a while. So it'd be handy to have an inflow today in terms of pushing the Bitcoin price higher. The Fed last night was fairly dovish, and so I'd expect risk assets, and Bitcoin is partly driven by risk assets, not just by diversification around the things that gold covers, sort of protection against fiat money, etc. But it's also partly a risk asset. So I'm very comfortable now that we won't go below 60,000 that we almost did yesterday. And I'd expect us to print fresh highs over the next couple of weeks. So a sideways choppy up and down 10% price action, I think, is relatively normal for Bitcoin.
So let's get back in 2021 when it was the first ATH for Bitcoin. What is different this time around for Bitcoin price? What's different than 2021, except of course COVID, before COVID and stuff?
Yeah, it's mostly the mix in terms of asset holders. So since January 10, you've had, as I mentioned earlier, the $11 billion of inflow to the spot ETFs. That's likely to be very sticky money, certainly compared to normal futures type positions, which have leverage involved in them. So you've had a very large inflow on the ETFs. Again, I think that's sticky. So that's a chunk of the market which is very likely there to stay now in terms of holdings. You have had a similar amount of inflows on the open interest side, both in futures and in options since January 10 as well. Like actually the numbers are very similar for options, futures, and the ETFs. In the futures and options space, you can't tell if it's longs or shorts, but let's assume most of it is longs. So you have had pretty big inflows there as well. In 2021, you got to a similar level in open interest in futures as we are just now. And the options market is deeper this cycle. So there's more open interest in the options market. In 2021, there was no spot ETF in the US. And so I'd say on average, the mix now is less risky compared to where we were in 2021. So because of that, I think we can keep pushing high. We'll have pullbacks like we've had this week. I mean, it's a 80 vol asset. It's like double the most volatile FX type example for, just now. So it makes sense you see those. But I think overall, the pullbacks will be bought into as we've started to see now already after the Fed were more dovish last night.
Okay. Okay. So let's talk now about altcoins. I would like to hear your thoughts on altcoins in this bull market, especially meme coins and others that are probably less tied to real projects and blockchain and Web3 solutions. Do you have anything particular to say about that?
Yeah, so in the last cycle, obviously you had altcoins in 2021 as well. So really that was the first one because you never really had them in previous cycles. But what happened then was Bitcoin went up first, which we've seen this time as well. So Bitcoin started rising aggressively, particularly after October last year when it looked like the ETF was going to get done. You then had Ethereum rise. So we've seen part of that as well. That obviously depends on what happens to the ETF in the US there too. And then altcoins. So it sort of happens in waves. This time altcoins have kept pace a little quicker than in the previous cycle. It makes some sense because the market's a bit deeper. There's a bit more knowledge about altcoins than there was in 2020, 2021. So it makes sense that they've picked up more quickly. My personal preference on things like meme coins, because it's difficult to point to fundamentals on those, but they certainly do talk to the optimism or confidence, if you like, in the underlying blockchain that they're built upon. So you can certainly argue that the meme coins that are on Ethereum, for example, if they trade well, then that talks to the underlying confidence in the Ethereum network. In the same way, some of the new meme coins that have been very popular on Solana presumably talk to the confidence in the Solana network as well. So I think in that case, the meme coin story makes some sense. Outside of that, given there's no particular use case for the meme coins, as you could also argue for the likes of Bitcoin, no actual use for that at the moment. It's more speculative, if you like, for me, but so long as everything goes higher, they probably keep going higher.
Thank you. Today, SEC set a new legal strategy to classify Ethereum as a security. What are your thoughts? How does this affect the landscape for future cryptocurrency ETFs, especially considering the initial optimism following the approval of Bitcoin ETFs?
Yeah, if the SEC state that they think it's a security, Ethereum, then that'll have implications for the ETF market. It's not clear that that will be the case yet. So the SEC argued in 2023 that 67 coins during the Ripple case were securities. They lost that case, and Ethereum was not included in that. So far there's been pushback in the Senate in terms of whether or not the SEC should approve the ETF for Ethereum. So that's still to play out. The market implied probability has definitely gone a lot lower. The Grayscale fund, for example, got up to about a 5% discount to net asset value in terms of Ethereum held, and now it's back to about 20%. So the market implied probability of May 23 as being the date has come off quite a lot. I think if it doesn't pass on May 23rd, then it will almost certainly pass in Feb 2025 after the US election. Certainly if there's a change of government and President Trump returns, then it's very, very likely that there'll be changes in the SEC as well. So in that scenario, I'd say Ethereum will have an ETF. It's in the spot market in the US. So it's more a case of timing, if you like, as opposed to this being a one-off chance.
Okay, but as I understood, there are implication of the SEC scrutiny of Ethereum's proof of stake mechanism for other cryptocurrencies that use similar consensus mechanisms. What do you think? How might this influence the regulatory approach towards them?
It's definitely a lot more complicated because of things like proof of stake. So Ethereum has, differently to Bitcoin, it has similarities to a number of different other asset classes. So Bitcoin is very, let's say, clean, and the SEC has always stated it's similar to a commodity. So it's quite easy. There's no yield, no staking returns. There's quite frankly, no real world use case. So it's more like a gold type analogy. For proof of stake, the staking returns are complicated. So probably you need to be either having them in actively managed portfolios. So this is more like a BlackRock having an active fund that trades digital assets more broadly, and or some of the staking yield returns are included. So there is in Europe an ETF on Ethereum that includes the staking returns. Coincidentally, actually, the fees on that are almost exactly equivalent to the staking yields. So it doesn't really actually flow through to the end user, but conceptually, the staking returns can be included in terms of so both spot plus yield. In the same way, you can have equity type ETFs that include dividends. So it's somewhat similar to that in terms of the return. So let's say it's a more complicated version compared to the Bitcoin story.
Well, these are all questions I wanted to ask you. Would you like to add something that I maybe haven't asked you, or you think it's relevant to our talk?
I think that's all good. So, I mean, my price targets on Ethereum, I could probably add in as well. So,
Sure.
I think that this year it's likely Ethereum will broadly keep up with Bitcoin, whether we get the approval on May 23rd or not. So, as a result of that, the price ratio between the two, I think, can be maintained for 2024. So, that should get you to about $8,000 for Ethereum by the end of this year. Now that I'm calling for $150,000 for Bitcoin this year. Next year, you should get some of the real world use cases come through for Ethereum, and they're, for me, gaming. So this is the uh, games like Minecraft that our kids play that at the moment are entirely owned by Megatech. So Minecraft is specifically owned by Microsoft. In terms of the next generation, which is sort of like Web3 games, they're almost certainly going to be built out on the Ethereum blockchain. And that industry is about $300 billion of revenue at the moment. So it's a huge industry that can, in my opinion, switch over to blockchain technology, where Ethereum is the most likely winner in that case. So that'll be the first world use case, which I expect to come through in 2025 to a degree. And also tokenization, which is tokenizing real world assets. That's started, but it's quite small so far. So if we get some positive actual movement on those next year, which I think we will, then probably the ratio of the prices goes up to about 7%, which is where it was in 2021, compared to 5.2% where we are today. And so given I'm calling for 200,000 next year for BTC, that'd see Ethereum up to about 14,000 next year.
Okay, thank you so much, sir.
Pleasure.
Pleased to meet you, and thank you for having this call with me.